McDonald's is not an AI stock. It is not a meme stock. And it is not the kind of name that usually moves 10 or 15% in a single day. But when a global defensive stock like McDonald's drops sharply from the recent high area and then shows a recovery signal on both the 2-day and 3-day charts, it becomes a chart worth paying attention to. In this video, we'll break down MCD, listed on the New York Stock Exchange, from both a technical and basic, fundamental perspective. We'll look at where the signal appeared, the key upside reference zones, the risk zone to monitor, and what needs to happen next for the recovery structure to improve. This video is for educational and informational purposes only. It is not financial advice, and it is not a buy or sell recommendation. Part 1. Why MCD is worth. Watching McDonald's is one of the most recognizable consumer brands in the world. Unlike high-growth technology names, MCD is usually viewed as a defensive large-cap stock. That means investors often watch it for stability, brand strength, cash flow, dividends, and long-term global expansion. From a business perspective, McDonald's continues to benefit from its global restaurant footprint, its franchise-heavy model, digital ordering, loyalty programs, delivery, and value-focused menu strategy. In its latest full-year 2025 results, McDonald's reported global comparable sales growth of 5.7%. Consolidated revenue increased 10%, and system-wide sales increased 11%. So fundamentally, this is not a broken business. It is still a global brand with scale, pricing power, and a very strong operating model. However, even strong companies can go through sharp pullbacks on the chart, and that is exactly what we are seeing now with MCD. The stock recently pulled back from the high area above $330 and is now trading around the mid-280s. Current market data shows MCD near $285, with a market capitalization of roughly $204 billion and a price-to-earnings ratio around 24 times. So the key question is simple. Is MCD starting to build a technical recovery, or is this only a short-term bounce before more weakness? Part 2. Current technical context. Looking at the chart, MCD had a strong decline from the recent high area above $330 down toward the 285 area. This is a major point because the current signal is not appearing after a clean uptrend. It is appearing after a fast correction. That means we should treat this setup as an early technical recovery signal, not as a fully confirmed long-term reversal yet. In technical analysis, the first signal after a sharp pullback can be useful, but it still needs confirmation. The next few candles are very important because they tell us whether buyers are actually stepping in or whether the stock is simply pausing after a decline. So for MCD, I'm not looking at this as a chase the price type of chart. I'm looking at it as a structured recovery setup with clear zones to monitor. Part 3-3-day signal. On the 3-day chart, MCD generated a technical recovery signal at the close of May 4th, 2026, around 284.10. This matters because the 3-day chart helps reduce short-term market noise. A signal on this time frame usually carries more weight than a signal on a very short time frame. The location of the signal is also important. It appeared near the lower end of the recent pullback after a steep decline from the previous high area. That does not guarantee an immediate reversal, but it suggests that downside pressure may be starting to slow down. For me, the 3-day signal gives the bigger picture technical context. MCD is trying to stabilize after a sharp correction. Part 4-2-day signal. Now, on the 2-day chart, MCD also generated a technical recovery signal at the close of May 1st 2026, around 286.64. This is important because we now have two higher timeframes pointing to the same area, the 2-day chart and the 3-day chart. When two timeframes align near the same price zone, the setup becomes more interesting. It does not mean the stock has to go up immediately, but it does make the chart cleaner from a technical perspective. The 2-day signal appeared around 286.64, and the 3-day signal appeared around 284.10. Both are very close to the current trading area, which means the stock has not moved too far away from the signal yet. That gives us a cleaner structure to analyze. Sun. Part 5. Upside reference zones. Now let's talk about the upside zones. The first upside reference zone I'm watching is around 293 to 297. This is the first area where MCD may face a reaction after the recent decline. If price can move into this zone, the quality of the reaction will matter. A weak reaction near 293 to 297 could mean the stock is still under pressure. But if MCD can enter this area and hold above it, that would be a constructive sign. The next upside reference zone is around 298 to 302. This is especially important because it is near the $300 psychological level. Large cap stocks often react around major round numbers, and 300 is a level many traders and investors will naturally watch. So the structure is very clear. The first recovery area is 293 to 297. The next resistance area is 298 to 302. If MCD can reclaim and hold near the 300 area, the recovery structure becomes stronger. But until that happens, this is still an early recovery setup. Part 6 Risk Zone. Now let's talk about the most important part of the chart, the risk zone. The key risk zone I'm watching is around 279 to 275. As long as MCD holds above this area, the current recovery setup remains technically valid. But if price breaks below this zone and closes weakly under it, the signal becomes weaker. That would suggest the stock may need more time to stabilize before a cleaner recovery structure can form. This is why I would not describe this chart as a confirmed breakout yet. The signal is interesting. The time frame alignment is positive, but the risk zone must be respected. A good technical setup is not just about upside. It is also about knowing exactly where the setup starts to lose strength. For MCD, that area is 279 to 275. Part 7, Basic Fundamental View. From a fundamental perspective, McDonald's remains a high-quality global business. The company has a strong brand, a large global footprint, and a business model supported by franchising, digital growth, delivery, and loyalty programs. Its latest full-year 2025 results showed growth in global comparable sales, consolidated revenue, and systemwide. But there is one important short-term factor: earnings. McDonald's is expected to report Q1 2026 results before the market opens on May 7th, 2026. Analysts are looking for earnings per share around $2.75 and revenue around $6.48 billion. That makes the current chart even more interesting, but also more sensitive. Before earnings, technical levels can work, but price may also react strongly depending on the report, guidance, margin trends, traffic, and management commentary. So for this video, I would frame MCD as a watchlist setup before earnings, not as a prediction. The technical signal is there. The zones are clear. But earnings could become the next major catalyst. Part 8. What I need to see next. For the MCD recovery setup to improve, I would want to see three things. First, the stock needs to hold above the 279 to 275 risk zone. Second, it needs to recover toward the first upside reference zone at 293 to 297. Third, the stronger confirmation would come if MCD can reclaim the 298 to 302 area and hold near or above the $300 level. If those things happen, the chart would shift from an early recovery setup into a stronger rebound structure. On the other hand, if MCD fails near 293 to 297 and then breaks back below 279 to 275, the recovery signal would become weaker. So the next few candles are very important. Part 9. Final summary. To summarize, McDonald's, ticker MCD, is showing a technical recovery signal on both the 2-day and 3-day charts. The 2-day signal appeared around 286.64. The 3-day signal appeared around 284.10. The first upside reference zone is 293 to 297. The next resistance area is 298 to 302. The key risk zone to monitor is 279 to 275. Fundamentally, McDonald's remains a strong global consumer brand with solid recent sales growth. But the upcoming earnings report could be an important short-term catalyst. So my view is simple. MCD is an interesting recovery setup to monitor, but confirmation still matters. This is not financial advice. This is my personal technical analysis using a fixed non-repainting signal system. If you want more US stock chart breakdowns like this, subscribe to the channel and watch the next analysis.